Hello and welcome back to our channel Polo Vega. From this week onwards, we're going to start a new segment with a brief commentary on events during the week and the calendar for the forthcoming week, along with the analysis of a few asset classes which commonly attract every trader's eyeballs. It's going to be a relatively light week ahead unless there's some major geopolitical activities that could cause volatility in the market. Before we move on to our video, let's first look at the disclaimer/disclosure clause. The contents of this presentation are for information purposes only. The material has been obtained or derived from sources believed to be accurate, but we do not guarantee its accuracy. The presentation is the 24th of a series of interactive videos aimed at educating our viewers, and would like to warn all our viewers of the risk associated with the business of trading and investment. Securities, investment, and trading is a highly risky business, and there exists a possibility of partial or total loss of investment. The ideas and opinions in our video are solely based on analysis of the market, and we do not advise/recommend/guide anyone to take any trade based on the contents of this video. And we do not take any responsibility for partial/total losses arising out of trades based on the contents of this video. Economic calendar/events from week 2/week 3. With all traders eyeing the next rate cut by Fed, everyone is closely watching the USD related data released every week. While the data released to core CPI released on Tuesday, core PPI released on Wednesday came out dovish, the rest of the data, including the unemployment claims released on Thursday, was quite hawkish. Since the Fed has always been stressing that the rate cut decision shall always be data dependent, market is still not very sure about Fed's fund rate decision on 29th January 2026. The GBP related data released on Thursday came out quite hawkish and made the sterling recover some of its losses from the week. However, the GBP USD pair finally retraced down to 1.3376, giving up all the gains that it had temporarily made from the hawkish data. The data docket for next week is quite light, except for the loonie on Monday, the sterling on Wednesday, the Aussie dollar on Thursday, and the most important of all, the BOJ policy rate and the monetary policy statement on Friday. There's also the flash manufacturing and services PMI for Euro, GBP, and USD lineup during the rest of the day. Now we shall talk about the dollar from the Dixie chart on our next slide. On the daily Dixie chart on this particular slide, one can see that the dollar has been range bound and moving sideways. This particular week, one can see that the dollar has been steadily moving up, and it may continue to move up or may move sideways up until the Fed release data date, which is the 29th of January 2026. Depending upon the news being hawkish or dovish, one could see the dollar break out above 100 and move up, or it could reverse back to its range bound pattern if the news comes out dovish. Amongst the asset classes that we're going to speak about today are oil and gold. The first asset class that we're going to speak about is going to be oil. The chart in front of us is the US oil spot this week. Oil used to be one of the most loved assets to trade by traders all around the world until it started going down continuously during the year 2025. Oil hasn't come up above the line, as you can see, 62.5 for the last 3 to 4 months. It started going down sometime in September, and then it managed to come back up and then again go down to make a new low in December, to be precisely on 17th of December. But then from then on, it has managed to have an impulsive move after a few corrections and has established two higher lows. One is at 55.7 and the other high is at about 58.65. So if the asset class manages to break above 62.5 and establish a new low, we can say that oil is getting into a new uptrend. But until then, we can say that oil has been traded sideways. One of the most loved asset classes during the last 1 year has been gold. Gold has maintained a bullish momentum and has had one of the best runs in its lifetime in the year 2025. On today's video, we shall talk about the gold-based ETF XAU USD. From the chart, we can see that the ETF has been trading above the 20, 50, 100 and the 200 EMA for the last 2 weeks, and the controlling low happens to be the red candle between 4270 and 4370. Unless price breaks below and closes below this highlighted controlling candle, one cannot see any signs of bearishness in the asset class. Looking at the gradient of the 20 EMA, one can see that the momentum of moving up and making higher lows has also maintained itself, and in spite of printing a strong bearish candle on the 29th of December 2025, the bull run has resumed itself. Although the asset class has printed 2 red candles on Thursday and Friday, one cannot preempt the sellers to be coming into the market unless the ETF prints a strong bearish candle and creates a supplier's area to absorb the buy orders. Otherwise, the bulls remain in command as they did for the whole of 2025. Therefore, we still call gold to be extremely bullish, and the bull run is far from over. We hope you liked the contents of our video presentation and found it informative and enlightening. We shall now be touching upon events which were the highlights of the weekly economic calendar, and shall also talk about interesting asset classes each week. Should you have any queries or require us to touch upon any specific asset, you may please get in touch with us on our email queries@polovega.com. If you liked our video, please give us a thumbs up and press the button underneath to subscribe to our channel Polo Vega and watch all our videos. You may also visit us at our website www.polovega.com or get in touch with us through our Twitter handle @polovega. Please keep saving, keep investing, and keep getting wealthier until we meet next. We thank you for watching our video. Please like, share, and subscribe to our channel Polo Vega.